If you receive Social Security, SSI, or SSDI, please take a moment to read this carefully. A significant update to banking compliance rules is being rolled out across the United States, and many seniors are not yet fully aware of how it could affect the timing and accessibility of their monthly benefit deposits. We are talking about the money you depend on for groceries, medications, rent, and everyday bills. This is not a rumor or political noise. This is a real policy development that financial professionals are describing as one of the more notable shifts to affect how banks handle government benefit payments in recent years. Could your deposit experience a delay? Could your account be placed under a temporary review? Could new identity verification requirements temporarily limit your access to funds? These are legitimate questions that every American over 60 deserves honest, clear answers to. I am going to walk through all of it in straightforward, plain English. No confusing banking terminology, no government jargon, just accurate and useful information to help you understand your rights and take steps to protect your benefits. Let us get into it. For decades, the American banking system has operated under a framework of consumer protections, including specific safeguards for seniors who rely on fixed income like Social Security, SSI, and SSDI. These protections were established following hard lessons learned from financial crises, bank failures, and situations where ordinary people lost access to their money through no fault of their own. The system was never perfect, but it provided important guardrails. For most people receiving federal benefits, those guardrails meant that their monthly deposit would arrive on schedule, land safely in their account, and be available to spend without complications or surprises. Here is what has been changing over the past year or so. There have been a series of regulatory discussions taking place at the federal level. Inside agencies like the Federal Deposit Insurance Corporation, the FDIC, the Consumer Financial Protection Bureau, the CFPB, and the Office of the Comptroller of the Currency. These are the agencies responsible for overseeing how banks operate in this country. The conversations happening within these agencies are directly connected to how banks handle government benefit deposits, how accounts are verified, and what happens when a bank flags an account for a compliance review. Most people never hear about these discussions because they take place in regulatory documents and policy meetings that rarely receive broad public attention. But the effects of those conversations can reach all the way down to your personal checking account, and that is why it is important to understand what is happening. In plain terms, the rule relates to account verification and fraud prevention protocols. Banks have come under increasing pressure from federal regulators to address fraud within the government benefit system. There have been documented cases involving fraudulent Social Security claims, identity theft targeting seniors, and accounts set up specifically to intercept benefit payments. While that is a genuine problem that warrants serious attention, the way some banks are choosing to respond is creating real complications for legitimate seniors who have been receiving their benefits for years without any issue. Here is how it plays out in practice. When a bank receives a deposit into an account that their automated systems flag as unusual, or when an account shows patterns that trigger a compliance review, the bank has the right and under new guidance in some cases, the obligation to hold that deposit, review the account, and in certain situations, restrict access until the review is complete. For most people, this might seem like a minor inconvenience, but for a senior living on Social Security and counting on that deposit to pay rent on the first of the month, a hold of even 3 to 5 business days can create a genuine hardship. We are talking about potentially missing a rent payment, difficulty buying groceries, and being unable to pick up necessary prescriptions. This is not a small matter, and it becomes more complicated when you factor in something called Know Your Customer requirements. Banks are already required to follow these rules, and they are now being expanded and updated. Under these requirements, banks must verify the identity of their customers and confirm that accounts are being used legitimately. For younger customers who regularly update their information, use banking apps, and respond quickly to messages from their bank, this process is largely invisible. But for seniors who do not use smartphones, who have limited internet access, or who simply do not check email on a regular basis, a verification request from the bank can go unnoticed until it has already become a problem. Let me describe what this can look like in practice. Consider a 74-year-old woman named Dorothy. She has lived in the same apartment for 15 years and has had the same checking account at the same bank for over 20 years. Every month, her Social Security payment arrives in that account on the second Wednesday of the month. She uses it to pay her bills, buy her groceries, and cover her medications. One month, her bank sends her an email asking her to verify her identity as part of a routine compliance update. Dorothy does not check her email very often. She misses the message. 2 weeks later, her account is placed under a temporary review hold. Her Social Security deposit arrives, but she cannot access the funds while the review is still pending. She goes into the bank and is told she needs to bring in 2 forms of identification and proof of her current address to resolve the issue. The matter is eventually resolved, but not before she missed a bill payment and went several days without being able to access her own money. That type of situation is not hypothetical. It is happening to real people across this country right now, and understanding it is the first step toward making sure it does not happen to you. You may be wondering whether there is a federal law that protects Social Security deposits from being frozen or withheld. The answer is yes, there are important federal protections in place. Federal law provides meaningful protections for Social Security and other federal benefit payments that are deposited electronically into a bank account. Specifically, when a bank receives a garnishment order, meaning someone is attempting to legally collect a debt from your account, the bank is required to review the account and protect a certain amount of funds that represent federal benefit payments from being taken. That protection is real and it matters. However, and this is a critical distinction that many people are not fully aware of, the protection applies specifically to garnishment situations. It does not prevent a bank from placing a hold on your account for compliance or identity verification reasons. Those are treated as entirely separate matters under banking law. This distinction is important and is not always clearly understood, even by some financial professionals. So let us be very direct about it. If someone is attempting to take money from your Social Security benefits to pay a debt, that is in most cases illegal, and the bank is required to protect those funds. But if the bank itself has flagged your account for a compliance review, or if there is a suspected fraud issue connected to the account, the bank has legal authority to restrict access while the review is underway. The key is knowing your rights in each specific situation and understanding exactly what steps to take if this ever happens to you. Having that knowledge in advance is what makes the difference between a manageable situation and a real financial crisis. Now let us talk about SSI, Supplemental Security Income, because the situation for SSI recipients is somewhat different and in some ways even more concerning. SSI is a needs-based program, which means it is specifically designed for individuals who have very limited income and very limited financial resources. The monthly payment amounts are lower than Social Security retirement or SSDI payments, and recipients are often among the most financially vulnerable Americans. For an SSI recipient, losing access to their benefits even for a few days is not just an inconvenience. It can be a genuine crisis with serious consequences. And yet, SSI recipients face many of the same account verification challenges as everyone else, and sometimes more so because they may be less likely to have established credit histories, more likely to live in shared housing situations that complicate address verification, and may have more limited access to the kinds of documentation that banks typically request during a compliance review. SSDI, Social Security Disability Insurance, presents its own unique set of challenges in this environment. SSDI recipients are individuals who paid into the Social Security system through their work history, but are unable to work due to a qualifying disability. Many SSDI recipients are managing serious health conditions that affect their ability to respond quickly to bank inquiries, travel to a branch location, or navigate complex verification processes. Some are dealing with cognitive impairments, mobility limitations, or mental health conditions that make these kinds of bureaucratic tasks genuinely difficult to complete on their own. The banking guidelines that have been updated because they were designed primarily with fraud prevention in mind do not always account for the real and significant barriers that individuals with disabilities face when trying to satisfy identity verification requirements. That is a gap that deserves attention, and it is something advocates are actively working to address. So what can you actually do to protect yourself? That is the part I want to spend real time on, because understanding the problem is only half the work. The other half is taking practical steps to make sure you are as protected as possible, and that if something does happen with your account, you know exactly how to handle it. Let us go through each step carefully, because I want you to come away from this feeling informed and prepared. The first and most important thing you can do is make sure that your bank has your current and correct contact information on file. This sounds simple, but a surprising number of people have not updated their phone number or email address with their bank in several years. Banks are increasingly using automated systems to send compliance notices and verification requests. If those notices are being sent to an old phone number or an email account you no longer actively use, you may never see them until your account is already under review. So this week, not next week, this week, call your bank or visit your local branch and confirm that they have your current phone number, your current mailing address, and if you use email, your current email address on file. This one straightforward step can prevent a significant amount of problems before they ever start. The second thing to do is understand what direct deposit protections already exist at your specific bank. Go to your bank and ask a customer service representative to explain their policy for holding or reviewing direct deposits that come from the Social Security Administration. Ask them specifically what would trigger a review, how long a review can last, and what you would need to provide in order to resolve a hold if one were placed on your account. Write down what they tell you. Get the name of the person you spoke with. Having this information before a problem arises means you are not scrambling to learn the rules in the middle of a stressful situation. Third, consider whether it makes sense for you to maintain a small emergency fund in a separate account, even if it is only a few $100s that is not connected to your primary benefit deposit account. I understand this is easier said than done for many seniors living on a fixed income, and this is not a requirement by any means. But even a modest financial cushion can give you important breathing room if your primary account is ever placed on hold. This could be a basic savings account at the same bank, an account at a credit union, or even a prepaid debit card that you keep funded and set aside specifically for emergencies. Fourth, and this one is very practical, make sure you know the direct phone numbers for the Social Security Administration and your bank's customer service line, and keep them somewhere easy to locate. If there is ever a problem with your deposit, the speed with which you can reach the right people matters a great deal. The Social Security Administration's main phone number is 1-800-772-1213. They are available Monday through Friday from 8 in the morning until 7 in the evening. If you have a concern about your deposit, they can confirm whether the payment was sent and when, which is critical information for any conversation you then need to have with your bank. Fifth, if you have a family member or a trusted friend who helps you manage your finances, consider adding them as an authorized contact on your bank account. Not necessarily as a joint account holder, but simply as someone the bank is permitted to speak with on your behalf when needed. This can make it significantly easier to resolve issues quickly, especially if your own ability to communicate directly with the bank is affected by health, mobility, or other personal factors. Having that contact in place before something happens is far easier than trying to set it up during a stressful situation. Now, I want to address something that comes up frequently when seniors learn about these compliance rule changes, and that is the question of whether to switch banks altogether. Some people have seriously considered moving their benefits deposit to a different institution where they feel they might receive more considerate service. This is a decision worth approaching carefully. Switching the account where your Social Security or SSDI is deposited requires you to update your direct deposit information with the Social Security Administration, and that process takes 1 to 2 full payment cycles to take effect. During that transition period, it is essential that your old account remains open so that payments are not disrupted or lost. If you do decide to make a switch, contact the Social Security Administration before closing your old account and confirm that the new account is fully set up and verified before you initiate any changes. Credit unions are worth mentioning specifically because many seniors have found that credit unions offer a more personal and community-oriented experience that tends to be more accommodating when compliance reviews come up. Credit unions are member-owned financial cooperatives, and they often have more flexibility in how they handle individual customer situations. They are also federally insured up to $250,000 through the National Credit Union Administration, which provides the same level of deposit protection that banks provide through the FDIC. If there is a credit union in your area that you have been considering, it may be well worth a visit to ask about their specific policies for handling federal benefit deposits. There is one more area I want to cover before we close, and that is the issue of financial scams targeting seniors. Anytime there is confusion or uncertainty surrounding the financial system, people with bad intentions take notice. Right now, there are individuals specifically using news about banking changes and benefit policy updates to target seniors with fraudulent phone calls, emails, and text messages. The most common version works like this. You receive a call from someone claiming to be from your bank or from the Social Security Administration, telling you that your account has been flagged and that your benefits could be interrupted unless you take immediate action. They then ask you to verify your Social Security number, your bank account number, or other sensitive personal information over the phone. Please understand this clearly. Neither the Social Security Administration nor any legitimate bank will ever call you without prior arrangement and ask you to provide your Social Security number or your bank account details over the phone. If you ever receive a call like that, hang up immediately. Then contact the Social Security Administration or your bank directly using phone numbers you already have on file, not any number the caller provided to you, and report what happened. As we come to the end of this video, here is what I want you to take with you. We talked about the new banking compliance rules and how fraud prevention measures can sometimes lead to holds or delays on federal benefit deposits. We clarified the important legal distinction between garnishment protections, which are strong and clear, and compliance hold policies, which are more complex. We addressed the particular challenges that SSI and SSDI recipients face in this environment. We walked through 5 concrete steps you can take right now to reduce your risk, and we covered scams and the practical resources available to you. Most importantly, I want you to leave this with a clear sense that you are not without options or recourse. Yes, the banking system is complicated. Yes, the rules are being updated in ways that are not always communicated clearly to the people most affected by them. But you have rights, you have access to resources, and there are people and organizations whose job it is to advocate for you. The more informed you are, the better positioned you are to protect your benefits and your financial security. That is exactly why content like this exists, because you deserve to receive accurate information delivered in a way that is honest, clear, and genuinely useful. Stay safe, stay informed, and take care. Subscribe to this channel for more practical updates that matter to you.